the things to point out and to note is the fact that we've coming towards the end of the earnings season, and we have a lot of companies that have reported their earnings, and one such company is Mazagon Dock. If you look at their quarter gone by, remember that no doubt the stock performance has been extraordinary for Mazagon Dock. But if you look at their performance in the quarter gone by, year-on-year basis, we've seen a sharp uptick come in. So their consolidated PAT has come in at around 195 crore rupees versus 125 crore rupees on a year-on-year basis. If you look at margins, it's seen an improvement as well. The margins have come in at around 6.8% versus 5.4% on a year-on-year basis. But let's bring on board the management for Mazagon Dock. Right now joining us is retired Vice Admiral Narayan Prasad, who is the chairman and the managing director at Mazagon Dock. A very good morning to you, sir. Thank you so much for joining us on ET Now. And let's talk about the quarter gone by for your company in particular. And as the post-lockdown execution ramping up, analysts are expecting that Destroyer P15B and frigates P17A will be contributing about 85% of its FY23 revenue. Do you also envisage the same?
A very vibrant good morning to you. Absolutely, you are on to the point. Our performance has been very nice even in this quarter. And as we discuss about the details, first thing is I concur with all the details which you have just rolled out.
Right, a very good morning, sir. This is Adira joining in. Pleasure speaking to you on ET Now. Also, sir, now the raw material costs as a percentage of revenue is marginally low at 58%, as against 60% in the base year. Are you seeing margins growing, is my question, sir.
In terms of the cost of raw materials, the variation in the prices of all different indices and impacting our production activities, since majority of the items have already been ordered, and these are all years gone by kind of projects, like the 6 in number submarines, these are of contracts of 2005. Similarly, 15 Bravo, 4 in number guided missile destroyers, they are of 2011, and project 17 Alpha, the stealth frigates, they are of 2015. So majority of the raw materials have already been procured, and we are in the final lap of doing the construction. So the price variations are exactly not impacting us, and wherever there's a price variation of equipments and all, the variation clause is already catered for in the contract.
Let me actually introduce myself to you, sir. I forgot to do so. This is Cheryl on the other side. Along with me, I have Adaraj Singh as well. Let's talk about your order book then. Your 42,500 crore rupees order backlog is spread over 2 critical projects, the P15B destroyers and also the P17A stealth frigates. If you could tell me what are the updates on these orders, and also if you could help us with some outlook on your order book.
Okay. I'll just take the first question first. That is, the current order book is roughly about 42,121 crores, which are spread over all the product profile that we have. That is the project 15 Bravo. Roughly, it is about 18,217 crores of residual order. Project 17 Alpha, about 19,436. Project 75, which is the submarine, 4,315 crores, and we are also undertaking a medium refit and life certification of a German origin submarine, and there the residual order book is about 83 crores, and others are about 69, totaling to about 42,131 crores. Now, these all are likely to be executed over a period of about 3 to 4 years from now. Now, more importantly, you brought the second segment as to what is the likely order books which are going to emerge from the current scenario in the near and the far distant horizon. So in the mid sector, the things which are already in the pipeline, and we can have a horizon of about, let's say, 2 to 3 years, is 8 in number next generation corvettes. Now, this is pegged itself by about 33,000 crores. In addition, there are some 6 high-speed landing craft, some polar research vessel, 1 survey training vessels, some 14 in number new generation fast patrol craft for Indian Coast Guard. If we talk all together, all these particular vessels, it also has got 6 in number, new generation OPV for Coast Guard. This totally goes to about 35 to 36,000 crores. Besides this one, the big ticket order for which MDL presents a very, very strong contention, because they are the only ones who till date have built this kind of a platform, that is destroyers and the conventional submarine. So we are at the stage of bid submission for highly talked about project P75I, that is P75 India, which basically talks about construction of 6 in number conventional submarine fitted with latest technology of air independent propulsion system and lithium ion batteries, and that is pegged at about 43,000 crores. In addition, we also have construction of 5 in number new generation destroyers, which is pegged at about 50,000 crores. So together, they almost make it about a 1 lakh crores. And for these orders, MDL presents a very, very strong contention, because in the past, only MDL has done it.
Would it be apt to say the order book would be around 1 lakh crore rupees in the future that you are envisaging for your company?
Certainly, yes.
All right.
If everything goes as per the plans, we present a very, very strong contention.
Right. Also, if you could talk about if you are seeing any delay in execution schedule or lower margin work done, which will actually impact your overall margins. And since of paucity of time, I want to add one more question to this. If you could tell me, will you be retaining your revenue growth guidance of 15 to 20% CAGR through FY25?
We will read, as we all understand, that these all are the orders which have been given on nomination basis. And the government, as per the rule position of DAP 2020, pegs the profit margin here at roughly at about 8%. Now, all additional margins that we generate are because of our efficient procedures and innovative technology that we are trying to bring in. And that is what we are talking about. This particular trend would continue over the next couple of years. Now, what we are looking at in the last quarter, in my interview, we have talked about as the year ends, we would be able to generate a turnover or a value of production of increase of about 19% over the previous year. The previous year was about 5,770, and we were talking about 6,830 crores. But today, based on certain parameter, I am telling you it is going to be an increment of almost about 30% and not 19%. It has got a potential. The turnover by the end of this current fiscal can go up till about 7,600 crores. And accordingly, all the margins you can add up to that.
We're expecting a revenue growth of about 30% in this financial year versus 19% growth that you had envisaged, isn't it? Is that what you're saying?
Correct. Yes.
Absolutely. Then on that very optimistic note, thank you so much, sir, for joining us on ET Now.